Hi everybody, welcome to this Smart Charts European session. Let's dive right in. So, a couple of headlines affecting the market overnight in the Asia session. We've had Israel's Prime Minister Netanyahu tell US that Israel will not strike Iranian military, nuclear or oil targets. So the price of oil has dropped sharply on the news. Now, we did have some pending orders on oil to keep on rallying higher, continue the trend that it has actually been in, but it's broken the structure we're looking for, so the pending trade expired. That's fine. Something to bear in mind is that oil prices are very volatile, so it was a positional trade where we were trading at lower risk just to try to capitalize on any volatility that does develop. Bear in mind it is highly volatile, so risk management is key. Even lowering risk can be quite useful when it comes to trading something like oil. And with the upcoming OPEC news announcements as well, with some rumors that Saudi Arabia may flood the oil market with cheaper oil in frustration of other OPEC members not cutting oil production as they wanted, it could continue to be quite volatile. So we'll continue to look for any opportunities where we can trade that volatility, but risk management is very key. We tend to lower the risk, maybe look for higher reward to risk as well, and just balance out the risk there of trading such a volatile asset class. Sometimes we do get some correlation between oil and the Canadian dollar, but right now with the Canadian dollar, the focus is on interest rates, inflation, and what the central banks are doing, and that's really the core focus that's affecting the Canadian. But we'll see if there's any good correlation that does develop over time. Now, we've also had the S&P 500 stock market index, which is an index of the largest 500 shares listed on the New York Stock Exchange, has hit another new record high overnight for the 46th time this year. I mean, really, we've been long on stock indices for the whole year, European stock indices and US stock indices, and not really much to say apart from the fact they're in long-term uptrends. We've just been buying the dips. We had some really good trades there last week that we went through on the Nasdaq, on the S&P 500 as well, the German 40 stock index as well at record highs. So it's been pretty good. When you're this far into the trend, not as many daily setups on stock market indices because you're quite far into the trends and they have limited trading times, not 24-hour markets like currencies are. So you really have to go to the intraday charts, but there's some really good 4-hour, 1-hour setups there to the upside. So we'll continue to look for that type of continuation. We do tend to get a seasonal rally that develops towards the end of the year as well, but with the prospect of lower interest rates from the Federal Reserve is putting a boost into stock market indices, which is why we're still running those very long-term trades we talked about a while ago on the Nasdaq 100 index, because that's the US stock market index that hasn't actually got to a record high just yet, like the S&P and the Dow Jones 30 has. So we said, okay, that index probably going to play a bit of catch up to the record high. So those are moving very nicely, and we talked about scaling into the trade as well with some good setups there last week on phase changes and twin flips. So we're looking for the continuation there and keeping an eye on the intraday charts for some further upside. And then we've also had Canada's biggest bank, RBC, forecast that the Bank of Canada will cut interest rates 50 basis points later this month. And this is why today's consumer price inflation report will become very important, because inflation, which measures the change in the price of goods and services in an economy, is a metric that central banks around the world use to determine interest rate policy. And quite simply, when inflation is rising, central banks tend to increase interest rates to get people to spend less in the economy and bring prices down overall. But when inflation is falling, central banks tend to cut interest rates to get people to spend a bit more money in the economy and get economic activity picking up. So it's a bit of a balancing act. So with today's inflation report, the market is expecting 2.3%, which was basically the same as last month. So not really any changes expected. But again, we know news announcements, it's when we get a surprise, when the market gets surprised, this is where we can get really big moves and volatility increase. Sometimes it's tradable, sometimes it's not, but we need to be aware of it. So if there's any big surprises today, maybe we get a much weaker than expected inflation number and increases the likelihood of a bigger interest rate cut, then we could keep the Canadian dollar selling off, which we know has been very weak, right? If you look at a chart of dollar Canadian, which again is one of the currency pairs we've been trading on the faster time frames, heavily overextended, very far into the move, but perfect for fast time frame traders. Algos are still buying the dips. So we can still maybe see some further upside there on the faster time frames. And we highlighted this at the beginning of the week that you might have a watch list, okay, where some currency pairs you're trading on a faster time frame because it's so far into the move. Some dollar pairs so far into the move that really the clues are on the faster time frame. But then on some of those pairs, also looking at the medium to higher time frame charts for any signs of potential reversals or coming to the end of the trend. So we're going to play it both ways when you're really this far into those type of currency trends. But let's take a look at the chart of dollar CAD and how we've been trading that, and highlight a couple of other opportunities to consider as well. Okay, so this is basically a chart of US dollar Canadian on the pip runner. So when you first start trading, you don't do a lot of fast time frame trading because of course much higher frequency of trading activity, and most beginner traders haven't built up the mental aptitude to take a lot of trades in a day and deal with the random distributions of wins and losses. So you might just start off with like one fast time frame strategy in the trading certification program, like the pip runner, the one we go through, but then of course add in more fast time frame strategies post master trader if that is going to be your sort of chosen style, okay. But pretty much we've had like a really decent rally, and you can see here already, like on the left hand side on the 4-hour chart, you can already see the bounces that we get off the moving averages. Okay, so this is where we can build positions, okay, phase changes, T-waves, momentum strategies, pretty good setups there actually on those strategies. But then when you get further into the trend, look, you've got less bounces here off the moving average because you're much further into the trend, okay. So this is where then, of course, you're going to go down to the lower time frames and start seeing if there's any opportunities in the moving average zone, okay, to then pick up any long positions. And really, so far, we haven't even broken this moving average zone, so we've had a decent rally. We said we'll continue to look for long positions here as the trend continues, but we also still need to be a little bit mindful, bigger picture. Are we going to get to some kind of reversal price action? I thought maybe we can get a bit of a reversal price action developing here. It looked like we had a bit of volatility there, but it never broke the low for the reversal, so that's fine. We just kept on trading it to the long side on the faster time frames. So again, we'll look for the continuation here. Just be mindful of the upcoming news announcements when this red vertical line is, the inflation report. It could be pretty volatile because of course, look, you know, everyone's heavily positioned in this market, but you know, everyone's still holding on to their trades, so you can get sometimes these really big spiky bars. So just be a bit mindful of that. Okay, so with stock indices, well, we're still looking for long positions, but we've already had the bounce of the moving averages on the 4-hour chart here. You know, we're quite far into the move, so you might even consider going down to the lower time frames, get some 1 hour 4 waves, or you know, other type of stock index strategies to capitalize on this move. But on the 4-hour chart, of course, just waiting for price to get back into the zone and looking for some more long positions. Also have some good setups there on the daily chart as well that we've been going through, again with nice cycles here developing off the moving average zone, and then just picking up, you know, what smart charts is looking for in that zone has been pretty effective. Okay, so we'll look for that as well. Right now, just got to wait for a bit of a pullback. Again, with US stock indices, same thing. Look, we've got above the moving average zone, and we've just really been buying the dips here in the zone. So we'll wait for it to come back and maybe look for some continuation. So really just bullish on stock indices, as you can see, and we're just trading it in the same places we have been. So we're just waiting for the pullbacks on some of the stock indices, but you know, some really good moves, and these were the follow-throughs from last week. Okay, so obviously good phase one moves on stock indices last week, but now you're quite far into them, so you're going to wait for a bit of a correction. Okay, so in terms of what our focus is over the course of today and the rest of the week, so something that's been highlighted from the Sydney and London smart charts trading floor is actually Oz Kiwi on the 180 phase changer, because it's a currency that we have been trading quite some time in these long-term uptrends that we've had historically. So if you look back historically, you can see we've got some nice cycles here developing off the moving averages. We had some nice cycles here developing off the moving averages, and we've been looking for the continuation here. We've had some nice cycles developing here off the moving averages. We're now back into the moving average where buyers had turned up before, and so we're looking for clues to see if, you know, the trend can continue, you know, at least maybe to this high point here. Maybe it can even take out the high point, who knows. So we're just in a similar kind of period as we have been. We're just in the same kind of situation. So on top of smart charts helping you to identify these type of trading opportunities, it also helps you to do the other work as well. And because what you want to be doing is really combining the power of algorithmic AI technology with a bit of human pattern insight recognition, a combination of those things are very powerful. We want to be looking for some continuation here, but also doing it in a risk managed way, which again, smart charts will help you with. So if we click the buy icon, we'll put an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences. It will do the risk management calculations automatically for you. Important to keep that risk low. Make sure you're able to deal with the random distributions or wins and losses that develop throughout the day, throughout the week, throughout the month. And then we'd like to set an expiry on this time frame and strategy. We set a current bar close expiry and then decline or accept the trade here at the bottom. And basically what that means is, look, if buyers don't turn up to continue to move, maybe it comes down a bit further, that's fine. Pending trade expires, didn't win, didn't lose, didn't cost you anything. But if buyers do decide to turn up, because they have been turning up here before, it either goes to your target level or your stop loss level. But now we can set and forget, and that's what we want to do, right? Set and forget trading, turn up, listen to the market, place our orders, get on with the day, right? So from a mindset perspective, that really helps with playing the probability game, because you have a high return on time value in the running of your trading business. And it's a metric that we measure actually every single week, every single month in our trading plans that we go through on your trading certification workshop. Okay, really, really important. Helps you to navigate the season and be aggressive in active times. We have to take a lot of trades, but also help you to be patient in the quieter times of the market as well. Okay, so make sure you're doing the work outside of just turning up and trading, because the work outside gives you the belief and confidence of what you're doing when you do turn up to the market, and just allows for a nice smoother journey. Okay. All right, that's it from me. So thanks for tuning in. All the best for your trading today, and I will speak to you soon. Bye for now.